But we are going to go ahead and get started. So looking at the chart, we have the S&P on the left, and we have the NASDAQ on the right, looking at the 1 hour time frame. Now, as you guys know, I said that CPI would likely follow through with one of these SMTs right here, and then completely blow out one end of the range. So for example, what happened, this SMT is the one that held, and then CPI immediately upon the open just blew right through the range. But how did I know that CPI would likely deliver like this and just blow through the range, no hesitation? Well, let's remove, or let's put on the lipstick. So as you guys can see, we have this non-sequential SMT, but it is confirmed by an hourly TPD. Now looking at this TPD, you probably think, okay, this is low probability. This doesn't really make sense. Even the cracking correlation between candle 1 and candle 3 is not really fully there. And for those wondering, yes, whenever you have candle 1 and candle 3 equal on one asset, and then on another asset, candle 3 and candle 1 either have or candle 3 has a higher open or lower open, while another asset has an equal open, that still is a TPD. So we had an SMT and then a TPD, and that is what confirmed the run, giving this move right here, completely blowing out the upper end of the range. That was unsymmetrical. Now, why did this TPD work? Why, even though there was no cracking correlation right here at the low, why did this work? Now, you better brace yourself because you're about to look at a lot of things, but so here we go from the hourly time frame to the 15-minute time frame. We have that SMT, and then we have that TPD right here. So this portion of price action that's highlighted in orange is that TPD, just looking at it through the lens of the 15-minute time frame. Candle 2 opens up. We have the change in state of delivery. Candle 3 opens up, being the 2 o'clock open. Price trades down into the wick of the reversion level and then expands higher. But let's say you missed that. Let's say you didn't quite see this. It was too quick for you. It was too quick to run. Well, ignoring everything else, and let's say you're looking at the chart from right here. So you had no idea that this fair value gap was going to be here. You had no idea. What do we have at the top? The upper end of the range. What is this right here? This is the interactive part. Exactly, the original consolidation. Price breaks lower, trades higher one more time into the original consolidation again, breaks lower, trades higher one more time, breaks lower again, and then forms a TPD after a sequential SMT formed. Whenever you have two short periods of accumulation like this, always go for the larger one closest to the TPD. So in this example would be this. So we have the original consolidation, first phase accumulation, and where's it at? Under the true day and the true week open. And then price forms that TPD, forms the reversion level, tags into that, and then runs. But if you miss this right here, let's play the tape. What did I tell you in that Saturday lecture? If a fair value gap forms after price breaks through that first phase accumulation. Exactly. So this would be the universal model. And as you can see, as soon as CPI opened up, this is exactly what the algorithm sees. There's these highs right here into that original consolidation. Why these highs? Why this period of consolidation? Because there's narrative and there's framework behind it. There's a TPD at the bottom of the range, creating a reversion level. 2 a.m. opens up, not 2 a.m., 2 p.m. opens up, tags into that. So there's no need for price to return down into here anymore. Price breaks higher, trades above this first phase accumulation, trades back lower into a fair value gap that was made inside of this accumulation. Once you see this right here, it's over. If you have a SMT and a TPD, and within that TPD you have a reversion level, and then before the reversion level you have a first phase accumulation and an original consolidation, if you mark out that original consolidation and target that, it becomes difficult to lose. Everybody on social media talks about market maker models or ICT market maker models, but nobody knows how to actually use market maker models. This is how you use market maker models. Reversion levels. If you have a TPD and a reversion level, look to the left side of the chart. If you have a first phase accumulation and an original consolidation, it's game over. A true breaker. Now, let's go a little bit deeper. Once we took out this high upon CPI, Jacob, when can I trade the 6 a.m. TPD? When can I trade the 6 a.m. TPD? I see it form, but I just don't know when I can trust it. There's no SMT there. I just don't know. What's this? And we're gonna draw this out live. What's this right here? Exactly, TPD. So let's go from the 4-hour time frame to the 1-hour chart. We have our TPD. All right. And we have our change in the state of delivery in the second half of the TPD. What is this? What would this be classified as right here? Exactly, a reversion level. Now let's look a little bit closer. What is this? The original consolidation. What is this? First phase accumulation. Price takes out the previous original consolidation, forms a TPD reversion level. Which asset is the one that trades lower? The one that created the change in state delivery. Which asset do I tell you to trade whenever things like this happen? The one that creates the change in the state of delivery. What happens at 10 a.m.? Opens up, reprices perfectly into here. After it breaks that first phase accumulation, so this could be, in a sense, a breaker within that reversion level. Price breaks lower. Where does it trade to? The original consolidation lows. What does the NASDAQ create? SMT. Why did NASDAQ create the failure swing? Because it didn't have this. Oh. It's there within and of itself all the time. If you go back and look at every single TPD that worked perfectly to the tick, you'll see this. Even TPDs that are iffy, you'll see this. If you see an hourly TPD and it caused price to reverse, go down to a 15-minute time frame and look for the same phenomenon. And you'll see it repeat over and over and over and over again. And on the way down, let's say the reversion level tags, right? On the way down on this price run, if you see another lower time frame TPD, you'll see the exact same phenomenon form on the way down. Yes, nobody else. Have you seen anybody talk about this before I brought it to your attention? For those that were in Dave's group, and I said that PSPs are the vertex of the market maker model. Now you knew what I meant months ago. Keeping that same framework in mind, coming into the rest of the week, as you guys know, since down here, I wanted to see price return within the range, and so far it has. It's been very consolidative and choppy higher, but we have multiple SMTs at the bottom of the range, as well as the top of the range, so I wouldn't be surprised if something were to form that screams bearishness. I wouldn't be surprised if it were to run down one more time before creating a real reversal. But if that doesn't form, if nothing bearish tipping its hand forms, then I'm remaining bullish. So my draw on liquidity, buy side liquidity right here, being the previous day's high. So are you remaining bullish until all-time highs? If something bearish forms, like clear-cut bearish forms, I wouldn't be surprised if it were to run lower one more time, but I'm... These highs are going to get delivered again. It might not be right now. It might not be next month. But these highs, they're way too clean. That doesn't mean long. That just means wait until a true reversal forms, and then it'll become easy. Using the 1 hour reversion level as a PD array, how could you have entered in a lower time frame? If you go look within there, there was more than likely probably another entry technique that I've taught. So you don't expect September lows to be taken. Like I said, if something clear-cut bearish forms, I wouldn't be surprised if it were to run down lower one more time before making a true reversal. But if that doesn't form, then momentarily, this buy-side liquidity is what has my eye. Fair value gaps. The only reason why fair value gaps work are because of timed highs and timed lows. Price doesn't really care much about this candle. Its main focus is this. If a fair value gap isn't in regards to time, more times than not, you'll see it fail. For finding original consolidation and first accumulation, just look for small tight ranges on below the 1 hour time frame, below the time frame the TPD formed. No, you look for it on the reversion level time frame. So what about the lower time frame? Do we get the highest probability gaps? Whenever the lower the time frame you go, the lower the probability it gets. Keep that in mind. In trading, that's just how it is. But if you focus on the time frames and the cycles that I tell you to focus on, you'll see it becomes very, very easy. With today's bearish for RTPD inside the daily fair value gap SMT fill plus weekly cycle SMT, is there anything clear that indicates the PM session should have ranged instead of finishing the run on the lows? And this is another reason why I'm bullish. But we have the S&P at equilibrium, NASDAQ in premium, and the Dow in discount, so it's kind of low probability. That's why I didn't really include it. But the reason why we stopped in the tracks is because, remember, original consolidation. That's where you'll typically find SMTs in lackluster price action. In ranging in the sense of it just, boom, takes off, you'll see the original consolidation just stay put, and it won't get ran through again. But in consolidative price action like this, you'll see the same thing that I just showed you over and over and over and over again. And whenever price goes to ranges or goes range bound, whenever it attacks both sides of the range, you'll see that. Is it possible for you to make a short explanation on market maker model? I know the idea, but not fully. Would be very appreciative. Just study the video. This is all you need to know. You have an original consolidation. And then you have a first phase accumulation. And then you have the reversion level. But what indicates the reversion level? A TPD. Once that reversion level gets hit and expands, that's whenever you know full force bow. Once price breaks above that first phase accumulation, you're looking for a gap that follows in tune with this first phase accumulation. And for the person that asked earlier why I didn't use the gap at the higher end of the range, keep in mind. Wait, you're telling me I can bring advanced premium and discount into this? Anyways. So this is why I structured everything in this order. This is why the universal model got brought out first, because you can see the universal model is here. But you have to understand reversion levels, and you have to understand TPDs in order to get to this point. So if anybody leaked anything, which really we've been cutting down on that, even if anything has gotten leaked, everybody that hasn't been with me for the past 2 months is completely lost. And for all the questions that you have, don't worry, we'll get into it deeper for how to properly identify things, anything of that nature. Because keep in mind, you've only known about this for a week. For now, just backtest. Backtest the things I'm saying, go in your charts, and get good at saying it. Because now the information is yours. But what are you going to do with it? That's what I'm interested in. So if you guys see everybody on Twitter in the QT community posting market maker models, you know who it came from. But with that being said, probably going to wrap up things here shortly. So any questions you have, now is the time. Yeah, the reason why the questions tab has kind of been disregarded, which I'll get to it one day and I'll completely clear it out, is because the time that I would spend answering the questions has now been transferred to the one-on-ones. So that's the only reason why that kind of is getting neglected, but one day I'll go in there and I'll clear everything up. Is the time WAP showing me my correct time zone for one-on-one is correct? Yes, but the US has jumped forward an hour, so keep that in mind. Can you talk about frequently asked questions people ask in one-on-ones on a live? I don't know. Some of them are so unique. But with that being said, I will speak with you all Friday in the pre-recorded lecture. So with that being said, good luck and good trading.